Hi, thank you for joining me on Riffs with Addie. And we have Michelle here today, one of the owners of Ives Insurance, and we are talking insurance. Super fun because of what's going on with the fires in California, even though she's nationwide. We want to kind of talk about in this segment what happened last year with insurance anyways, and then what's going on now with the added fires in California. Because I think there's a lot of just misconceptions on like what really happened and what's going on. So let's talk about that.
Rates are changing and they will be changing more, and just a
Not
lot of
mine.
confusion. I know.
No.
There's so much is, as you said, so much has gone on in the last year that people don't realize was kind of happening. I think the media has put things out dramatically here and there, but yeah, a lot has changed. So basically, about a year ago, maybe a year and a half, actually since 2020, the Department of Insurance did not, for many reasons, didn't allow insurance companies to change their rates. So every year, insurance companies obviously have to follow inflation.
Sure.
And ever since COVID, obviously, inflation skyrocketed quite a bit. And with that, and when I say inflation, we're talking about the cost of construction materials, we're talking about vehicle pricing, gas, all those things that play into insurance and what these companies are insuring. So whenever an insurance company wants to raise their rates, they have to go to the Department of Insurance and put in, hey, I want to raise my rates 10% or whatever it is, and they say yes or no. So
They do that yearly?
yeah,
Like
I mean
whenever, yeah.
it's probably
Okay.
annually,
Yeah.
probably to just kind of match the inflation. And so they weren't able to do it above, I think it was 6.9% since 2020.
Okay.
And so what happened was, obviously, rates were staying stable, yet the insurance companies were still having to pay out more money with inflation. So the vehicle prices were higher. So the money they're getting in is starting to become less. And the price for vehicles was going up and up. And so they were like, we can't do this because
Sure.
at some point our bucket's going to be empty,
Yeah.
and we're going to have to pay out. And we can't afford it.
Sure.
So over time, the insurance companies tried to negotiate with them, tried to do all these things. It wasn't working. So they finally had to put their foot down. And some of the large insurance companies started saying, we're going to leave California, or we're going to pause doing business in California until you allow us to change our rates. And at first it didn't work. And then more and more companies started kind of leaving.
And was it only California?
Yes, California is where it was being hit. So we hear it from the insurance carriers, and some say it was a commissioner. I know there's many different political views with all of it. There was re-election happening. There was a lot that was going into it. I don't know. We just kind of take what we hear, and that's what it is. But I will say it does make sense that the carriers would need to raise rates because things were getting more and more expensive. Glass, like car glass, if you crack a windshield now, you have technology inside that windshield. There's so much more that goes into it. Whereas years ago, with a 10, 12-year-old car, glass is glass, and it's a lot cheaper. Now there's so much more, so it's more expensive for the carriers. So that all kind of happened. Meanwhile, as those carriers were pulling out, then the insurance commissioners started to sort of approve rates. So that's where those rate increases are coming from. So people will start to see their auto rates and their home rates go up, probably pretty dramatically, because these carriers are trying to catch up from 2020. So we're looking at 30%, 40% rate increases. This is all insurance companies across the board. So that was kind of one part of the fight that was going on out there. The other piece of everything is that as the insurance companies were coming and going and doing all these things, they're looking at their risk in their books. And before these LA fires even occurred, brush has always been an issue in California because of our previous fires. And also there was other disasters across the nation. A lot of these insurance companies insure multiple states, right? And so Florida, the hurricanes going on the East Coast, all those things, these carriers are paying out of the bucket, right, that everybody's putting their money into. So they're losing money. And so the carriers are looking at their risk across, and they're saying, okay, there's some brush areas. We're probably expecting a fire to happen pretty soon, or we're feeling like that's happening. we need to start pulling out of some zip codes. So we had seen that kind of start to happen. On top of that, in California, if somebody lives in Escondido or Poway or a higher brush area, one of the options that you have to go to is going to the California Fair Plan.
Right.
And that's the state, it's a state-run plan, basically. It's actually a privately run plan, but mandated by the state that they have to accept pretty much everyone. And so what happens is that with the California Fair Plan, because they have to take anyone and everyone, they only have a certain amount of money. And so if that money is depleted by a large fire, then they have what's called reinsurance that steps in and helps. And then if reinsurance is depleted, then the deal is that all of the other companies in California have to split the difference. And depending on what your market share is in California, if you insured 20% or 30% of all the homes in California, then that's how much they would have to take of that overage, right? So they've used the example of like Big Bear or a very tight area. If Big Bear were to burn down, California Fair Plan insures many, many homes because other carriers won't take it.
Yeah.
So the California Fair Plan bucket isn't big enough and the reinsurance isn't big enough. And so State Farm had a large market share of homes in different areas, 30%, let's call it. They looked at their book back in 6 to 8 months ago and they said,
later.
we can't do this.
Yeah.
Like if Big Bear burns down and we have to pay 30% of the market share of the overage, we're going to go insolvent. So therefore, we have to non-renew policies because we can't carry that much of a market share.
Right.
So now, fast forward to the fires that have occurred in LA, which is devastating. Now the headlines are all, State Farm got out of my policy, all these insurance companies have non-renewed and all this stuff. And the reality is State Farm did what they had to do or else they would have gone insolvent and then no one's claims would have been covered at all.
Right.
So there's many layers, and I'm sorry to be so long-winded, but there's so much there that people don't realize. And I don't represent State Farm, but I feel bad because they're being just torn apart in LA for non-renewing all these policies. But that non-renewal process was way before these fires even happened. And it was because of everything that's happened in the last year and them just trying to do the right thing. So it's crazy.
Yes.
Yeah.
So what are you seeing? So what are you seeing now?
So now the fires have happened.
Yeah. I feel like they're still happening. I think this morning there's a fire too.
Yeah, there's fires in San Diego now, which is they're just popping up everywhere. Yeah, we're like, we need rain.
Right?
Yeah, it's crazy. Yeah. So I don't know. We need rain big time for sure. But I think what happens now is because the LA fires are just now really getting contained and all these carriers are going to look at their losses. I think the way to kind of compare it to is Florida when they had large hurricanes. Everyone's going to kind of do an analysis of their losses. We're going to see what carriers got hit more or less. The interesting thing with the fires was that hit a lot of areas. That went all the way up to the water. Yeah. So it wasn't necessarily all California Fair Plan policies necessarily. Yeah. There's insurance companies that are going to get hit. Mm-hmm. And so they're going to do the analysis. What I predict, because people are like, nobody's going to be able to get insurance in California anymore. This is going to be it. But I think it'll be similar to Florida, where in Florida now, to get wind insurance, some companies do insure wind and water over there and all that, but storm insurance. But there's a state program for that. And that's just kind of what happens, I guess.
So you have like insurance, but then you have another policy for that.
Yes. It's just storm insurance, wind insurance, and it just covers that. It's essentially how it is right now with California Fair Plan. I just think there's going to be more of it. I think you're going to get fire insurance through California Fair Plan or a similar organization, and then you'll get what's called a wrap policy or a difference in conditions. So the condition fire is covered by California Fair Plan, and then all of the other perils, your liability, vandalism, malicious mischief, water coverage, those types of things will be covered on a different policy.
Do you feel like this is going to take a lot of people out of California even more? Because I know, like, selling property,
Yeah.
you know, and like the one I reached out to you in Ramona, I'm
Yeah.
like, man, paying like $7,500 or something a
It's
year
crazy.
for insurance on a home that's 750,000.
I mean,
It's like,
insurance used to be
what?
like, I mean, a home policy could have been like 850 to
Yeah.
1,000. And now it's like, if you're in one of those areas, yeah, you're looking at 7 to 10 grand to be properly insured. And so I think it
Like
will.
another
I mean,
1,000 a month.
yeah,
Just for that.
which is so expensive. I mean, it's just crazy.
Yeah.
What it's done for sure. So
What-
I think people, yeah, I think it'll probably drive some people out. You can't afford to
no
live there
kidding.
anymore. It's crazy.
Right?
So
My
yeah.
gosh. All right, you guys. Thanks, Michelle. We're going to be
Yes.
back with you in a moment. Talk to you soon.